Morning, or maybe it's not morning anymore, it still is. Thanks for Maguire giving me the opportunity to speak here. Firstly, to introduce Greencoat, for those who don't know us, we're only in Ireland 2 years, but we now own 10% of the operating wind farms in Ireland, so we've made a good impact in the first couple of years. We're an investment manager, or an investment fund manager. We primarily invest pension fund money into renewable assets. The company was started about 10 years ago in the UK. We have three kind of large funds that we manage. One in UK, we now have 860 odd megawatts of wind in the UK. We have a solar fund in the UK which owns about 470 megawatts of solar. And then the Greencoat Renewables Fund, which is the one I work for, is a European fund focused on Ireland initially for the first 2 years. And we, as I mentioned, we've bought 384 megawatts of wind in Ireland in the last couple of years across 12 projects. We bought from small independent developers, larger developers, utilities. We do 100% ownership, majority, minority, so with and without project finance. So we're quite flexible in how we do business. We're looking to continue to grow in Ireland and in Europe. So if you do have a wind farm for sale, I'll be around all day. And we're focused on operating assets only. So we generally don't take construction or development risk. So we prefer to buy at or after COD. So that's Greencoat. In terms of the opportunities I've identified, firstly, I'd echo what others have said. I think just, we're working in a really great space. There's going to be a huge amount of opportunities in this space over the next kind of 10, 20, 30 years. As we're transitioning from a world driven by fossil fuels to a world driven by renewables, and it's a once-off kind of transition. And I think it's going to accelerate with the impacts of climate change. I think as you start to see more and more storms and things that are where people can really feel the effects of climate change, it's going to accelerate. And while it's something that we need to do, it's also going to create a massive business opportunity. The ones I've focused on, firstly, close to home, talk a little bit about the opportunity that pension fund money is going to bring to the renewable space. I think we've seen the targets talked about here, the 70% by 2030. That's going to require another about 5,000 megawatts of renewable assets in Ireland, which equates to about somewhere around 8 to 10 billion euros worth of investment. So in order to deliver that cheaply and at a low cost to the consumer, it's important that the right capital is used for that and the right money funds it. And I think pension funds are a good fit for renewable energy assets. We have pension funds like long-term investments. They like to make relatively large investments. They like sustainable investments, which fits well with all the things that we're doing. So it's a great fit for renewables. The opportunity then in Ireland and what pension funds money can do. So far we've purchased, all the projects we've bought have been refit assets. So we've allowed development companies who owned assets to recycle their capital and pump it back into their development pipelines, such as what Peter mentioned, the deal we did with Quilcha last year is allowing them to reinvest that money into the gigawatt of new assets that they have. And we've done that with a lot of other companies. I think for the next phase, with auctions, potentially corporate PPAs and other things, it's going to be important for us to engage earlier with developers so that we can work with them to try and model in, the most efficient way to build and own assets, and ultimately get the price down as low as possible. So we expect to engage with people earlier than we have to date. I also thought, just listening to some of the discussion earlier about the engagement with communities and communities investing in renewable assets in their local projects. There is some risk associated with that, and I think probably over the next 10 years you'll see more funds like Greencoat. We're publicly, we're listed on the Irish Stock Exchange, so anybody can buy shares in Greencoat. And I think you're going to see more of that, and it will be a vehicle for people, the public, to invest in renewable assets. Things that make Ireland attractive for our fund, it's seen as a stable, Ireland's seen as a pretty stable market. We've good growth potential with the targets that we've talked about. We've an excellent wind resource, which it always helps when the business case kind of stacks up with strong wind. And we have a supportive and progressive system operator. You saw the presentation from Mark earlier on all the things that EirGrid and ESB are doing to allow more renewables onto the system. I would touch on the things that could alter that position from an investor's perspective. There is some, there seems to be a lot, my experience in the last 2 years in Ireland, there's a lot of small things that are impacting on the viability of wind farms in Ireland. It feels a little bit like death by a thousand cuts. We have rates, which everybody would be aware of, and the proposed increase in rates across wind farms. The priority of wind, we have priority of dispatch on the system, but then you see constraints and curtailment that, quite high numbers. The last quarter last year was over 8% across our portfolio, which is quite high, and starts to raise eyebrows. Most European investors don't know what constraints and curtailment is because they don't see it in Europe so much. Then you've had ISEM. We've got the new market being implemented, which is great, but that shifted costs onto the generator, the balancing risk onto the generator. Some of the rules of ISEM are still a little bit up in the air and haven't been firmed up yet, which creates more uncertainty. TUOS charges, last year we saw a massive increase in our TUOS charges, which is just another thing that gets questioned. And then you have all the planning issues. While we own operating assets, we're still getting challenges on grid connections, Section 5 and grid connections. We've had judicial reviews. We've the wind energy guidelines that are coming out apparently shortly. There's some uncertainty around that. So there's a lot of things that are just chipping away, I think, at investor confidence. So it's something that I think, as an industry, we need to fix to keep Ireland as a good place to invest. The next one, next opportunity I was going to talk about, it was the corporate PPA opportunity. I think there's a potential opportunity here in Ireland over the next 10 years. A lot of the big corporates are already here and already using electricity here. And then we know about we talked about the growth in data centres, and that's exploding in Ireland over the last few years and expected to continue. All these companies, they want to buy green energy. We as an industry would like to sell them green energy. And I think the government has also stated that they want they would like to see a functioning corporate PPA market in Ireland. But it's not happening. And you have to ask why. I think probably the biggest question is around price. I think some of these corporates, they're global companies. They've seen what we saw earlier, the prices in other markets. And their view is, well, if I can buy, $30 or €30 a megawatt hour renewable energy in Scandinavia or some other country, then I'll just buy it there and offset it against what I'm using in Ireland. So I think there's an opportunity here. I think it's going to take leadership from the industry. I think the government needs to be involved to help find solutions. And I also think the corporates and the industry as well needs to come to the table to try and figure out how to make it work. If we don't, I think it potentially is a big problem as well. If we're adding a massive amount of load to our system, it just increases the targets that Ireland Inc. has to pay, and I can't imagine people would be happy if we end up paying fines when these corporates are buying power elsewhere. And then lastly, I am an engineer, as I mentioned, so I will talk a little bit about technology. I do see that there's going to be a transformation in technology over the next 10 years that is going to change the way that wind farms are managed and operated, and how the technology itself works. We hear all the the buzzwords about big data, machine learning, Internet of Things. But I think what that's going to mean is we're going to be getting much more smart turbines, much more sensors on our turbines to monitor how they're performing and how they're doing. I've read about the improvements we're going to see in satellite communication, these nano satellites that are small, like 10 kilograms in weight, flying around in low orbit. They're going to potentially deliver high-speed broadband globally, and particularly to remote locations where we have wind farms, and do it cheaply, which means you can pull vast quantities of data back out of the turbines to our centres where we can analyse. And I think the turbine technology as well will the turbines themselves will be smart machines, and we'll be able to analyse how they're performing and identify issues early, so that maintenance teams can be deployed sooner. And all of these things will bring the cost of bring the efficiency of the machines up and bring the cost down. And then you have practical things like, I've worked on a project where we had self-hoisting cranes, so you don't have to bring large cranes to site. Could change a gearbox with a cheaper self-hoisting crane. And then things like drone inspections, which I know some companies in Ireland are already trialling to do inspections of wind farms using drones. So all these things, I think, are just going to improve the efficiency of the technology and ultimately bring the cost down. So that's it from me. I'll leave it there and look forward to any questions. Thank you.
Thanks very much.